Great. So welcome to our free session, courtesy of RCM Online College. I want us to look at a question that is covering the concept of limiting factor analysis. The question actually is found in topic number 8 for the CPA and also FMA. Topic number 8 under break-even point analysis. So one of the applications of marginal costing is the limiting factor analysis. So you do marginal costing in topic number 7, you get to number 8, you apply that concept. So the question says that Medical Limited is a pharmaceutical company which manufactures three types of medicines, namely we have alpha, beta, and zeta, using absorption costing methods. So just to give you a background, absorption costing is where a company is including all the production costs to be part of them, or all the cost incurred, both variable and fixed. In other words, the costing methods here of production is anchored on two methods. Number one, we talk about absorption costing, which has been mentioned there, right? It normally comes first, that topic. Then number two, we have marginal costing. So in absorption costing, both fixed and variable, production costs will form part of the product cost, right? Production cost. Then in marginal costing, only variable production costs will form part of the product cost. So that's the difference between absorption costing and marginal costing. So when the examiner tells you that the company is using absorption costing, then it means it is both fixed and variable production costs that normally forms part of product cost. That is what we have been told in the first part. Number two, we need to understand that as we cover the limiting factor analysis, right? Limiting factor, as we give the limiting factor analysis, there must be something. The underlying item here is that we have to look at the relevant costs in decision making. Right? So how do we deal with it? The first thing we'll be saying is that number one, all variable costs are relevant costs in decision making. That is number one. Number two or number three, all fixed costs are irrelevant costs in decision making. All fixed costs are irrelevant costs in decision making. You cannot make a decision by relying on the fixed cost. You will make a decision by relying on the variable. So all variable costs, whether it is variable production or variable non-production, so long as it is variable cost, it will be relevant in decision making. All fixed costs are irrelevant costs in decision making. Whether the company is looking at the fixed production costs or fixed non-production costs, then still we'll say they are irrelevant in decision making. That is why, as we apply or look at the concept of limiting factor analysis, fixed cost comes at the very last point after making a decision. We will make our decision based on the variable cost. So once we are done with the decision making, that is when we now bring in the fixed cost to get the final output. output. So let's proceed and see what is given there. I can see we have been given selling price per unit. Then the cost per unit, we have direct material. Direct material is a component of prime cost. So automatically, the entire cost will form part of the decision-making figures. Then, when you go to direct labor, it has been divided into two. We have the skilled labor, and then we have the semi-skilled labor. Okay. Then, the next one, we have fixed overhead cost, and we are being told to see additional information. Number one, the fixed overhead cost has been used to be part of the product cost. Why? In absorption costing, both fixed cost and variable production, or variable cost will form part of the product cost. That is why, well, that's what the company is actually applying there. So that's why you can see the fixed cost per unit is also given. Below that, we have net profit per annum, right? Then we are having what you call expected maximum production and demand. Ideally, this is what will happen. No one will refuse, or a serious company cannot reject an offer of demand of their products. So let's say the market is demanding 10,000 units. You will not sit down and just wait. No, you will make sure that you are able to provide the 10,000 units. If the market is demanding 50,000 units, automatically the market is existing. Somebody needs these goods. And of course, when they get the goods, you'll be paid for that. So what happens? Companies normally have interest. The only issue is these companies, some of them do not have the capacity to deliver, do not have the capacity to purchase the necessary material to be used in the production. So in that case, they have to look at the possible or the shortest route that will help them maximize on their returns from the limited resources. Is that okay? For example, if RCM was to offer maybe, let's talk about a 𝗖𝗺 unit, right? And a CPA unit. So 𝗖𝗺, maybe RCM has got 150 students, but for CPA, RCM is having 700 students for a unit in CPA. So if they were to, and they only have one lecturer, right? So they have one trainer, they have only one trainer who can teach this unit in CPA and also teach this unit in CPA. Where will they? And the trainer cannot do the 2 units at the same time. So it means this institution has got a limited resource. What is the limited resource? It is this trainer. It is this trainer. So the question will be, if we engage this trainer to teach CPA and we forget about 𝗖𝗺, what will be the total benefit? That is option 1. Option 2, if we are to engage this trainer to teach 𝗖𝗺 and forget about CPA, what will be the total benefit? So out of the two, which one will we go for? Definitely everyone in business is working hard to make sure that they get the maximum return. So as a company, if this CPA will give you the highest revenue, that is it. That's what you go for. If 𝗖𝗺 will give you the highest revenue, that is what you go for. The same way, this company is already having maximum demand, but there's a resource here that is limited. They cannot purchase what is sufficient to provide the entire demand. So they are forced to do the rationing. They are forced to look at the most profitable product and proceed with its production. Information number 1, we are being told that fixed overhead costs are 1450 per annum. The variable overheads are absorbed into production at the rate of 100% for skilled labor and 50% for semi-skilled labor. That is the variable production overheads. Okay. Then the variable overheads have not been absorbed into the profit statement above. Okay. There is a maximum of 28,000 skilled labor hours available. So you'll find that maybe the 28,000 cannot meet the expected demand of 3,000, 5,000, 6,500. Then below that, we are being told deficit units can be outsourced from chemist supplies at the following prices. So let's now get to the first part. We need to do this or identify the the variable costs, all the variable costs. So allow me to just erase this. Allow me to just erase that very fast. It is advisable we put it maybe to the other side, so we can have zeta alpha. That's clear. Start with the selling price. Right. 870, 1095. Okay. Now to that, we need to start accounting for number one, the variable cost. And the variable cost, of course, we know we have what we call the prime cost components plus the variable production over X. So let's start with the direct material, if we have it, direct material. Direct material. So you can see the cost of direct material 115, 140, 140, 220. From direct material, we have direct labor, which was divided. So is this a continuation of our class work? No, these are free session. These are free session. It is a question from topic number 8. I hope in the normal class you are currently under topic number 4, right? Yes, so they are not the same. So we go to direct labor. It's divided into two. We have skilled, right? And then we have semi-skilled. We have skilled and yes. So semi-skilled, I can see the skilled, we have 80, 160, we have 80, we have 160, we have 240, okay. Then 60, 120, we have 60, 120, then we have 110, that is labor. Then from that, we are talking about variable production overhead. So variable overheads. Now, if you look at the variable overheads, what are we being taught? Go to additional information number. Go to information number 2. The variable overheads are absorbed into production at the rate of 100% for skilled and 50% for semi-skilled. What are we trying to say? 100% for skilled and 50% for semi-skilled. That is to say, for us to get variable overheads, for example, for product alpha, we'll take 100% of the skilled labor cost, which is 80, right? 100% of 80. Then we add 50% of 60. 50% of 60. So all this put together will give us what we call variable overheads. Will give us what we call variable overheads. Okay, so can you give me that figure? 100% of 80, that should be 80, right? 50% of 60, that should be 30. So when you take 80 plus 30, what are you getting? It will give you 100 and 110. So that is what we bring as the variable overheads. That is what the examiner meant by saying 100% of skilled and 50% of semi-skilled. Now, are we able to proceed beyond that point and get the variable overheads for better? 100% of 160 plus 50% of 120. That will be 160 plus 60. 200, 220. The next, that was zeta. Zeta, we need 100% of 240 plus 50% of 110. That must be 240 plus 55. 240 plus 55, that will be 295. That will be 295, okay. So let's take 220, bring it here. Then 295, 295. Good. Now, do we have any other variable cost that we have not captured? Do we have any other variable cost that we have not captured? Remember, in limiting factor analysis, all the variable costs are put here. Whether it is variable production or variable non-production, so long as it is variable cost, we put it here. Do we have any other variable cost apart from what we have captured? No. Only these ones. So let's go ahead and get what we call contribution margin, contribution per unit. Contribution per unit. So contribution per unit is equal to selling price per unit minus all the variable cost. That is the prime cost component plus the variable component. This one say we can put them in negative. Let's put it in negative. So someone with a figure for product alpha should be able to give us down there. We take 595 minus all those figures. You take 870 minus all those things. Right? You take 1095 minus all those figures. What are we getting? What are we getting? A is 230. Okay. Somebody to give us the second one. Any person can actually start from any point. Admin is telling us beta is also 230. Beta 230. Okay. Zeta. Somebody different should be able to give us the value for zeta. The 24 of us, somebody should give us the figure for zeta. C, that is zeta, is not going to 230, I'm told that. Is that correct? Is it correct up to that point? Thank you. We have a problem. I thought these figures could be different, but now, if you are to be asked, are you able to give us the most profitable product at this stage? Are you able to give us the most profitable product? Remember, alpha is giving us contribution of 230. Beta is giving us 230. Zeta is also giving us 230. Is it possible to be sincere? Is it possible for us to know that, this is the most profitable, followed by this, followed by this? Is that possible? It is not possible. So, it is because of this that we have to get to understand. In the process, the company generated 230. How many units of the limited resource did this company use? How many units of the limited resource did the company use to generate this contribution of? Remember, this contribution is like profit. We said fixed cost does not affect the decision making, so that fixed cost is constant. It is not dependent on the units of output or what has been used here. It's not affecting that limited resource. So basically, you're saying this is the profit somebody is getting or a company is getting when they produce alpha, beta, and zeta. But we cannot make a decision at this point before knowing the actual units of the limited resource used to generate this profit. Good. Allow me to take to the next part where you're able to see the interesting part of this question. Remember, examiner is always an examiner. Once an examiner, you will always be an examiner. Good. Now, look at additional information number 3. The maximum, there is a maximum of 28,000 skilled labor hours. So, talk about skilled. labor hours. We have 28,000 hours. The first thing we need to know, we want to know whether it's a limited resource or not. So, available skilled labor hours is 28,000 for the entire company. Now, are we able to tell the number of skilled labor hours required for product alpha? We should be able to tell that. How do we get it? Look at our question. We have been told that the skilled labor hours is charged at the rate of 80 shillings per hour. So we are saying that shillings 80 is equal to 1 hour. Shillings 80 is equal to 1 hour. How much did the company, or how many hours did the company use if it paid for? So the direct labor, the skilled labor hours, the company paid 80 shillings to produce alpha. So how many hours are those? We still have shillings 80 times 1 hour, or shillings 80. So that will give us, how many hours are you getting? 1 hour, right? 1 hour. Okay. Then number 2, that is for alpha, right? Alpha. Then we'll go to beta. Now, beta, we're also saying that shillings, 80 shillings is equal to 1 hour. But this company incurred 160 shillings. So 160 shillings will be equivalent to how many hours? Shillings, 160 shillings multiplied by 1 hour, then divide by 80. So what are we getting? How many hours? Somebody to confirm. We are getting 2 hours, right? Good. So that is 2 hours. Great. Then we finalize with the last one, zeta. We are still seeing that shillings, 80 shillings is equal to 1 hour. And the company utilized how much? 240 of the skilled labor to produce zeta. So shillings 240 will be equivalent to how much? Shillings 240 times 1 hour over shillings 80. That will be how much? I mean, how many hours? That will be 3 hours. That will be 3 hours. So that is what we have. 1 hour, 2 hours, 3 hours. Good. Now we've been able to put that down. So I want to erase this to use this space. Allow me to erase to use that space. So the available skilled labor hours is 28,000. Now, for product beta, the company, let's just do alpha. Are we able to get the units that are demanded for product alpha? The demand for the entire year, maximum or annual demand for product alpha. Are we able to get that? Product alpha, annual demand. I can see how many units? The last row, expected maximum production and demands. We have 3,000, right? So 3,000 units of alpha are actually demanded, and the company is to use 1 skilled labor hour. So that will give us a total of 3,000 hours, right? 3,000 hours. For product beta, the company also needs to produce 5,000 units, times 2 hours, right? Times 2 hours. That will give us 10,000 hours, right? 10,000 hours. Then for product zeta, the company needs to produce 6,500 units, and each requires 3 hours. That will give us, so 3 by 6,500, is it giving us 19,500? Is it giving us 19,500 hours? Yes, good. Can we get the total hours needed? 3,000 plus 10,000 plus 19,500. Total is 32,500, right? So I'll come here and talk about 32,500 hours. So let me just go down here and say total needed hours, and let us be specific, needed skilled labor hours is 32,500, right? Hours. A company needs 32,500 labor hours to fulfill the maximum market demand. But the company is able to pay for skilled labor hours up to a maximum of 28,000. The question is, if you compare what is available with what is needed, are we talking about a deficit or a surplus? Are we talking about a deficit or a surplus? We actually have deficit. Okay, deficit. So we're talking about deficit. Now this deficit, in some books, we call it shortage. Right? Shortage. In other books, we call it shortfall. So what is the actual shortfall? The difference between what is needed and what is available. How many hours? 4,500. But let us listen and listen carefully. It is because of that deficit that the company's management, right? It is because of that deficit that the company's management will go back and have a meeting. What are they going to discuss in the meeting? This is what will be discussed in the meeting. Now that we cannot get the less of 4,500 to fulfill what is demanded by the market, what are we going to do? Should we drop all the units of alpha? Or should we drop some units of beta? Or should we drop some units of beta so that we can fulfill the other units? Or can we abandon the project in its entirety? Right? That's what the management will be discussing now. The procedure, right? Maybe all the management members there are not skilled in terms of costing. So they need someone who has got management accounting knowledge, right? Maybe management accountant, who will now help them make an informed decision. How will they know the unit to draw and even the quantity of that particular product? This is what they will do. First of all, we'll come here and say, can we get the units of limiting factor to be used in each product? So, limiting factor per unit. Already we know that limiting factor is skilled labor hours. But it normally changes. Maybe in your August exams, the limiting factor will be units of direct material, like in the case of CPA, August 2022 sitting. The limiting factor was direct material. It can be semi-skilled labor hours, right? Like in the case of CPA, April 2023. And of course, it is skilled labor hours in the case of CPA August 2024. So what I normally encourage my students, you now come here and put in bracket skilled labor hours. So you know, right? Good. Once you do that, the next thing you're going to do is this. Can you tell us the hours required to produce 1 unit of alpha? That is the skilled labor hours. It will be 1 hour. it will be 2 hours. Right? As for what we have in here, then of course we have 3 hours. The next question will be, what is the contribution per limiting factor? Contribution per limiting factor. In other words, the company you got a revenue of 230 by using only 1 hour in product alpha. The company got 230 by using 2 hours of the same labor hours, right? Then the company got 230 as profit by using now 3 hours. The question is, are we able to get contribution per limiting factor? We are trying to equate them to be equivalent to 1. So, can we take 230 divided by 1? That will definitely be 230, right? 230 divided by 2? 230 divided by 2? Contribution per limiting factor, we take 230 divided by 2. What are we getting? 115. 230 divided by 3. 230 divided by 3. 230 divided by 3 is 76.667. 76.66. 76.667, right? Good. Now, I want us to proceed. At this particular point, what you have done is interpreted this way. You have limited time. You have been told to choose between the 3 things. Which one will you go for first? Which one will you do? You have like only 1 hour. Look at what 1 hour will do to you. If you utilize this 1 hour, to produce alpha, the company will get profit of 230. If you utilize the same 1 hour to produce beta, the company will be getting 115. If the company was to use the same 1 hour to produce zeta, the company is now having a profit of 76.667. Which product will you go for first? Which one will you go for first? Where will you spend the first 1 hour? You will take that first 1 hour to produce alpha, right? That is what we are now referring to as rank. We are ranking based on profitability. So this product alpha becomes number 1, right? Good. So let's say you have managed to produce all units of alpha and you still have this 1 hour remaining. Where will you go to? You have produced all units of alpha that were demanded. You still have something remaining. You go for beta because it now gives you something close to the highest. Let's say you have some extra hours that are not having any allocation, and you see there's a profit somewhere there of 76. So what will you do? You now consider if there's anything remaining. If there's anything that is remaining, you can consider producing zeta. So what we have done is ranking of the products based on profitability. Have you been able to understand that? Confirm. Thank you. So having ranked the products, the next question will be, can you give us the optimal production mix? Yes, you've ranked the products. This will be number 1, number 2, number 3. Can you give us the actual quantity of each product, which will maximize our returns? We're done with this part. So the first step was to identify the limiting factor and the deficit. We did that. We went ahead and now worked out all this, and we all know the most profitable product. The next step, we are going to now look at these products based on the actual, or what you call optimal production mix. Good. This is how we'll be able to arrive at my optimal production mix. The available skilled labor hours is 28,000. I'll start with product number 1, which is alpha. Alpha, I look at what the market is demanding. How many units of alpha are demanded by the market? How many units of alpha? How many units of alpha are demanded by the market? Units of alpha? 3,000, right? I'll come here and say, I'll take 3,000 units, multiply by 1 hour per unit. That will give me 3,000 hours, right? That is equal to 3,000 hours. Can we get the balance? Can you get the balance? So the balance will be what is available, 28,000 minus 3,000. That leaves us with a total of 25,000 hours. Product number 2. So we now pick them based on the ranking. We pick them based on the ranking. Product number 2 is beta. So let's come to beta. So beta here, we are told that the market demanded how many units? Is it 5,000? Yes, 5,000. So come here and talk about 5,000 units demanded by the market times 2 hours. Remember here, each unit of beta requires 2 hours. So when you multiply by 2 hours, it gives you a total of 10,000. 10,000 hours, right? 10,000 hours. Can we get the balance? So the balance will be 25,000 minus 10,000. That gives us, is it 15,000? 15,000 hours. We go to the last product, that is zeta. Product number 3. Good. Now, for zeta, remember we have already identified that our resource is limited. So we cannot produce all units of zeta. Why? The market demands 6,500 and each unit is 3 hours. That will be a total of 19,500. 19,500. Our balance is only 15,000. So we cannot produce all units of zeta. How then do we work that out? I'll come here and say if 3 hours is equal to 1 unit of zeta, then now that we have only a balance of 15,000 hours, what will we have? What will we have? So we have 15,000 hours. 15,000 hours times 1 unit of zeta. We divide by 3 hours. So what are we getting? Somebody to give us the actual units of zeta that will be produced by the company. Actual units of zeta. Actual units of zeta that will be produced by the same company. $5,000 units. So we were told to get the actual production, or what we call optimal production mix, right? Optimal production mix. So I can simply say here that optimal production mix down here. Optimal production mix. The company will manage to produce all units of alpha, the 3,000 units. The company will manage to produce all units of beta that are demanded by them. The company will manage to produce only 5,000 units of zeta. The market needs 6,500. The company can manage to produce only 5,000 units. In some questions, the examiner normally stops at the optimal production mix. While in other questions, like this one here, the examiner will go further and tell you, should you find out that the company cannot produce all the units that are demanded, the deficit will be outsourced from an external supplier. I'm repeating. In some questions, the examiner normally stops at the optimal production mix. Whatever the company cannot produce is normally forgotten. But in other cases, like this one here, the examiner will go beyond the optimal production mix. That is to say, whatever the company cannot produce will be outsourced from an external supplier. I hope you've ever gone to maybe a shop or to town to purchase a product. So once you go to that shop, you tell them, I need 15 units of this product. They tell you, customer, just give us 3 or 5 minutes, we pick it from the store. Right? They'll tell you, yes, we have 3 or we have 7 pieces. The remaining 8 pieces are in our store. So let us move very fast and get it for you from our store. It is normally not a store. It is getting it from somewhere else and bringing it to you. That act of getting it from somewhere else is going beyond what you can provide, right? It's basically looking for it outsourcing. In this question, the examiner subjected us to that. So can we get the outsourced goods? Outsourced goods. Or will they outsource alpha? No. All the units that were demanded were produced. Will they outsource beta? No. All the units that were demanded were produced. Will they outsource zeta? Yes. The market demanded 6,500. The company managed to produce 5,000. So how many units will be outsourced? How many units of zeta will be outsourced? 1,500. 1,500. That is what we have in our question. So I want us to now get the resulting optimal net profit. I hope we are together up to this part. The whole of this section is now clear to somebody in this meeting. The whole of that section is now clear to somebody in this meeting. Good. Having done that, can we now go ahead and get total contribution from actual production? Right? Total contribution. So total contribution. Not even total, but contribution. Contribution from external or from goods produced internally. From goods produced internally. Now, the company produced 3,000 units of alpha. Now, before you can do that, you are told to give us the resulting net profit. Right? Why are you going back and telling us it is 3,000 units that were produced and sold? So you're taking 3,000 times selling price 595 minus 3,000 times 115 minus 3,000 times 80 minus 3,000 times 60 minus 3,000 times 110. You will take the whole day there. You'll take a lot of time and you have limited time in exams. What are you supposed to do? We already have this. You did the question and you have all this in your answer sheet. So you don't need again, you repeat this section. Save on time. How will you save on time? All these, from the selling price all the way to the variable overheads, are dependent on the units. Right? What is the resulting contribution per unit? It is 2 calories. Please save on time. Don't repeat again these things. No. take 230, multiply by 3,000. Directly, you will give us contribution and you will save on time. That's why I'm now trying to take 3,000 times 230, right? Times 230 plus 5,000 units of data, so plus 5,000 units times 230 again, that is the contribution per unit, plus how many units of zeta? 5,000 units of zeta. Sorry, 5,000 times contribution 230. What is the total contribution from the goods that were produced internally? Total contribution from what was produced internally? Total contribution 29,90,000. 2990. Someone else to confirm? 2990. Someone else to confirm? 2990. So we have 29,90,000. 29,90,000. Perfect. Having done that, the next thing is, remember, there are some goods that were outsourced. You outsourced and you sold them. So we have revenue for what you outsourced. So the question is, how much did you incur to get these goods? Outsourcing is basically you're going to pay for what you call purchasing cost. So the purchasing cost here is also a variable component because it depends on the units that were purchased. Now, the next thing I'm going to tell us here is contribution from purchases. Contribution from external purchases. From external purchases. Go to the question under additional information. Is there somewhere the examiner is telling us, number one, these goods that were outsourced, they were of high standard, so the company charged more amount when they're selling them, right? Or they had a different selling price. Number two, maybe the goods that were outsourced were of low quality, so the company sold them at a lower price, right? Something of that kind. Or also, go to the additional information and check. Is there somewhere we are being told if these goods were to be outsourced, then the company would have paid this particular amount per unit of the outsourced product? Do we have such additional information anywhere? If yes, which additional information is addressing something close to that? Information number 4. The examiner is telling us that, let us read it together. Deficit in units. The 1,500 for Zeta or any other product out of the 3 can be outsourced from chemist suppliers at the following prices. Did the company outsource Alpha? No. So that 425 is out here. Did the company outsource Beta? No. That 650 is out here. Did the company outsource Zeta? Yes. Zeta was outsourced. So my first question is, what is the contribution per unit of the product outsourced? So you can see contribution of Zeta here is 230. And the company outsourced 1,500. So let me see. If I take 1,500 that was outsourced times contribution of 230, is there something wrong I've done? Somebody? Is there something wrong I have done by doing that? By taking 1,500 times 230? Is there anything wrong? I have done a very big mistake, right? What is the mistake? I cannot use 230 because this 230 was arrived at when we took the selling price minus the production costs. These 1,500 units, they were not produced by this company, they were outsourced. No production cost will be used in getting their contribution. What we're supposed to do, we need to get the revenue. So 1,500, right? The units, times the contribution. Number one, we have not been told that there was a special selling price for the outsourced goods. So definitely they will be sold also at 10.95. So we take 10.95 as the selling price minus all the variable costs related to the outsourced goods. The only variable cost we have is the purchasing price, which is 895. So we'll have 895. Then I close my bracket. So first of all, can we get contribution? 1095 minus 895. That will give us 1500 times 1095 minus 895. 1095 minus 895. That will give us 200. So the contribution for the goods purchased is 200, not 230 that you have in there. Good. So can we get this amount? 1500 by 200. 1500 by 200, what will you have? 300,000 or 3 million. 300,000, right? So we'll have 300,000. So can we get total contribution? Total contribution for the company, 2990 plus 300,000. 2990 plus 300,000. What are we getting? $29.90. 29.90 plus 300,000, 32.90. So we have 32.90,000. 32.90,000. Perfect. Once we have 32.90,000, what are we required to do? What are we required to do? 32.90. Do we have fixed cost? So you can see we already made a decision at the limiting factor per unit. We also rank the product. That was now the decision. Ranking the product was now the final decision, right? We applied the decision that we made by or in getting now the total contribution for the company. As we now finalize to tell the company, generally, this will be the net profit. We need to now bring in the fixed cost after we had made a decision. It was made long time ago at this point. So the fixed cost is coming at the very last part, just to give us the net profit. So do we have the fixed cost? Do we have the fixed cost? If yes, how much? Fixed cost ngapi? 1450,000. So yeah, so less fixed cost of 1450,000. 1450,000. So that will give us what we call net optimal profit. So what is the net optimal profit? Net optimal profit. Somebody should give us the net optimal profit. Net optimal profit. Net optimal profit. Good. So we have 1840. 1840. That is the net optimal resulting profit. But just something that I've seen, which we need to clarify. Assuming the additional information for the total fixed cost was not given, do we have a way of getting it? Assuming total fixed cost under additional information was not given to us, do we have a way of getting it? The answer should be yes. Look at the first table. Remember, we are told the company is using absorption costing, and the fixed cost was part of the product cost. So look at where we have the fixed cost per unit. How much is it? How much is the fixed cost per unit? How much is the fixed cost per unit? Let's have a look. 100. So for product alpha, the fixed cost is 100, and the company or the market demanded correct. As I was explaining, I said if we were not given the fixed cost under additional information, this is what we could have done. So you tell us the production cost per unit of the fixed production cost per unit for alpha was 100 and 3,000 units were demanded, plus 100 units or 100 shillings per unit of beta, and remember 5,000 units are demanded, plus the fixed cost is 100 shillings per unit, and 6,500 units were demanded by the market. 6,500 units. So when you put all this together, are you getting a figure? If yes, how much is the figure? How much is the figure? When you put all that together, how much are you getting? How much are you getting when you put all that together? 1450. 1450,000. So that is what you have to use as the fixed cost. So if you don't have that additional information, you pick the workings from the table and you're able to see. Actually, if I was this examiner, I would have ignored the 1450 block figure and just left it that way. So you will pick this from the first summary. But are we together up to that point? Are we together up to that point? Find one where limiting factor is not provided. Actually, it must be 2022. Around April 2022, we must be having something where you are to identify. Step number one, identify the limiting factor. That's a very nice question. Number two, we are also having outsourcing. So we are identifying the limiting factor, the outsourcing effect. Another scenario, in some questions, they normally combine the variable cost and fixed. So they tell you the unitary cost. So for example, the unitary cost was to be the summation of all these costs plus that fixed. So it is upon you to identify the fixed cost, you will have to introduce unknown. Let variable cost be X, or let fixed cost be X. So from there, so we have so many dynamics that can be used to actually set this question. So I think that is enough for today. That is very interesting. I only want to put some things across here. Number one, someone who is planning to join RCM classes and they are still making a lot of meetings. No, the time for meetings has ended. Please make a decision. So this management accounting as a unit is divided into two, very important. We have the morning class, which normally starts from 5 to 7 a.m. We have evening class, right? We have evening class, which starts from 6 to 8 p.m. That's the one that I'm now handling. So when you join this evening class, you will get me there waiting for you. You will get me there waiting for you. All right. So the early morning, I have my colleague will be able to also take you to the same unit. That is option one. Option two, so it means these two options are favoring the working class. Number two, we have what we call LMS. This LMS will allow you to access all the recorded classes. We do a class, you are really committed, you cannot attend the class, you get the videos recorded in an LMS. You join us today, you are not there last week, you get the videos in LMS. And the good thing, those videos in LMS are not edited. So even just imagine what we have been doing for the last 1 hour, no editing. If somebody asks a question, you get it in that particular video. So that makes it very, very useful and very easy to actually catch up with the rest very fast. Even if you've forgotten a concept, when you go to this LMS, you can put that video at your own pace. You say that speed is too high, let me put it 0.5. So it explains to you at your own pace. You get a concept. If you are also conversant with it, you want it to move very fast, you go to the last part of it, you make it 2.5 at a speed of 2.5. So you get to move very fast. Depending on your capability of understanding, depending on the speed that you want, LMS is giving you that option. Number three, now RCM is not against your access. Actually, RCM is supporting you. So if you are doing this unit for the first time, with all those benefits, RCM is only charging you 5,200 for this unit. Right? With all those benefits, RCM is charging you 5,200 per unit. If you are rechecking the unit, remember, there's no one who sits down and say, I want to recheck the unit. No, it is due to disagreement with the examiner, or maybe one or two things were not done correctly. RCM is giving you a discount of 400. So instead of paying 5,200, you pay 4,800. That's the discount you get when you are checking the unit. And the good thing, now that somebody is saying, I cannot get this 5,200 today, please tell us something realistic. I cannot get this 4,800 today. How can you help me in such a case? It is very simple. Do half. Deposit half today. Deposit half today. Start your class. Clear the balance within 30 days. So as you look for the balance, you are already learning. Don't wait until you get the full amount. Is when you start learning. Do half. Start your class. The balance will come within 30 days. Right? Yes. The good thing is that payments are done to the payment college. So you must see the name RCM Online College. You must see the name of RCM Online College in the payment you need to make. Right? So account number, we are referring to management accounting. That is, maybe you want to combine it with the fund. You add the fund. You want to also add maybe audit and assurance. You bring it here. No, FM is remaining. You bring that FM. Yeah, that's how you put the account. That's how you put the account. And the good thing is, if you want now timetable for all other units, these people are here to get you. They will be operated to. They will be operated to. These people will give you the entire timetable. Any inquiry you want to make, just reach out to them. they'll be able to guide you big time. Now, the very last part, somebody saying, okay, I followed the link and joined this meeting, but I'm at intermediate level. I followed the link and joined this meeting, but I'm currently at foundation level. The question is, are you also offering other units in other levels? Are you also offering other courses offered by QASE? I'm also thinking of maybe doing another course with QASE along CPA. That is possible because RCM is offering these things that I've been mentioning here. If you want CPA, RCM is the home of CPA. If you want CIFA, then just go to RCM and you'll see wonders. You'll see great things, especially with regards to CIFA. Don't forget that if you don't qualify for CPA, you cannot give up because ATD, the diploma level, allows you to start your accounting journey. If you don't qualify for ATD, we are not leaving you behind. You must still board this bus. Then comes the certificate level comes here and allows you to start. Then from CAMS, you go to ATD. From ATD, you go to CPA. The good thing, if you start from CAMS, you'll be exempted from level 1 of ATD. When you start from ATD, you will be exempted from the entire foundation level of CPA. So there's some advantages. If you don't qualify for CPA, clear your ATD within a year or even actually 2 semesters. Go to CPA, you are exempted foundation. You start from intermediate level. What a great option. Then we also have CS, company secretaries. This is there. We also have 𝗖cie HIH. Right? Then once you clear the highest level, the professional courses, you now go to what we call post-professional. So you do CFFE, right? You become certified public finance manager, right? That is still under QASE. Then of course we now go international. So once you clear all this, we now go international. RCM is that one business block where once you get in, you come out as a certified and qualified professional. You log into RCM for CPA. By the time you're leaving out RCM, by the time you are leaving out, my friend, you are now an international accountant, right? Because you clear your CPA, you get exemptions in taking ACCA. You clear your ACCA, you now become an international accountant who can work anywhere in the world, courtesy of RCM Online College. Please make up your mind because we are going to do that scenario I've mentioned under this concept will be done at 6 p.m. today in the class. So please do your payment, do your deposit so that you don't miss our 6 p.m. class today, where great things will be happening. So can you confirm to me that indeed we have not wasted your 1 hour that we have been together here? If you have wasted your time, then we are sorry, please. We'll try and improve next time. But if you've learned something, please confirm. Have you been able to learn something? Have you added some value? Great. Then, of course, that now means the fulfillment of the purpose of actually having this class. So thanks for your time. Enjoy the rest of the day. And let's meet at 6 p.m. today for our normal session. See you then.